So it's crazy. Okay, I can hear you now, and you can hear me. So
you can hear me now?
Yes, I can hear you now.
I feel like I've said you can hear me now like 15 times.
Yeah. Gotta love technology. I'm illiterate.
I started talking about the worksheet. Do you want to reverse the order, or
yeah, you can go ahead and get started. Yeah.
Okay.
Do you want to share?
Glad to have you, Laura.
Yes.
Glad to have you working. Good to see you. All right, so we're flipping the order. We'll do the worksheet and the mindset portion first, and then Lauren will switch over to ags and talking a little bit about setups and perhaps both futures and options. Great, awesome, thank you. Yeah, so you guys, if you have any feedback for that worksheet and you need me to change things around or add things for you collectively that makes sense, let me know, because it's super easy through Claude and I can plug it in. I coded it with Claude myself, so it's a non-issue if you need me to make some changes. So anybody have any feedback that they need from that worksheet?
Dani, do you want to share your screen, or do you want me to share?
Oh yeah, I can. Sorry, I totally forgot about that. Might help. Here.
Yeah, and I guess just as we get started, I want to reiterate that for compliance purposes, this is just for educational purposes only, and everything presented is just our opinion and not a solicitation or a guarantee of any kind.
Yeah, thank you, Lauren. Okay, everybody can see this? Only one. Wait. Great. Okay, so again, I'm going to ask, is there anything that you guys need to be added to the spreadsheet? Looking for feedback. Okay, thank you. Mm-hmm. All right, well, if it comes to mind, then just let me know. What I've also added to the login is a weekly recap. And I think for me personally, while I'm on this journey with you, it's a constant reminder, and I needed it so badly last week. We've got some things going on in the house, and I've had people in and out of the house all week. I knew I shouldn't have touched my screens at all, and I did, and it didn't work out so well for me. So I thought this was a good thing to put together for myself and hopefully for you guys. Maybe you'll take more advantage of this versus a daily worksheet to recap your week so let me just run through it. So what happened in your life this week? Because remember, about mindset, it also has to do with where you're at in your present moment and what you're experiencing with your emotions and any of your actions, your behaviors, all that and the above. So what happened in your life this week, so you can reflect on, I don't know where your week ends. For me, it's Friday, but certainly I would start to fill this out Friday afternoon, and I can recap what happened, and then I can see how that affected my week. Was it a light week that worked? Did we have people in the house? Did we not have people in the house? How many sessions did I trade this week? My overall P&L, the A trades. So the grading of the trades, right? Your A trades are your setups, your indicators that you have, that your ORs or your VWAPs or your moving averages or your fibs, whatever the case may be that you're using. Those are your indicators that you initiate your trades, and how many of them did you follow your plan and your rules. And then your B trades, you're a little bit early. There's a smidgen of emotion component to it. And then your C trades are just impulse trades. So last week I had a ton of C trade clusters, I call them, where I trade in the noise. They're quick, they're short, they don't last more than 30 seconds, which is that 30-second rule that I have on the guide. and that I'm just looking for the momentum where I know if I just waited and I saw where the market was going rather than putting those 3 C cluster trades that happen in threes, always happen in threes for me. Then if I waited and I was patient, then certainly I would get on the move and on the momentum of the trade. But that didn't happen because I had so much else going on in my mind. So hopefully this will help you guys like I needed so last week. So did I follow my process this week? Where did I override myself, and what was happening when I did? So usually if I'm overriding my rules, and Lauren, you can attest to this too, it's usually I'm frustrated. My P&L, while I'm not watching my P&L, I'm aware of my P&L. And then what did the data show me that I wasn't seeing before? Well, the data will show whether you're aware and you're present with your trading and you're calm, collected, or it's going to show there's a little bit of chaos that has seeped in. What pattern showed up most this week? Okay, was I following my plan, not following my plan? Was I 60-50? Was I more emotional? Was I thinking about when the doorbell is going to ring next, or when I need to walk the dogs? Was, what's on my mind, what's showing up in my trading? And so what was my most honest moment of this week? So perhaps my most honest moment was finally when I stepped away from my screens. And
Can you go back and kind of explain? I mean, the A trade is obvious, but what do you consider the difference between a B trade and a C trade?
So the B trade is your A trade, but you're just a little bit too early or too late.
Mm-hmm. Okay.
So you know that, you'll hold it a little bit, whichever way, right? Because you're a little bit early or you're a little bit late. Mm-hmm. And so you're going to take a little bit of heat one way or the other.
Mm-hmm. But it still is your setup.
Right.
Falls with I found myself taking some, I guess in hindsight, maybe by the end of the day, we'll call them C trades. Right now, I still call them a B trade of just executing on gut feel and emotion rather than the setup. So you get stuffed out and then you want to put it back on because you're like, I really feel convicted on this, even though the setup's not there. So I just, recognized it, stopped, had that self-talk, and then, followed back in line with the process. So
I would count that trade in my mind. Thanks for sharing, Laura. I would count that trade as a B trade because you didn't fall into the C trade cluster. Because had you just jumped right in and ignored that whole conversation that you brought yourself to the present moment, you're like, okay, I made that, it was a little bit off, then it would be put in the C cluster, the C trade category.
Yeah, so the setup was there on the daily chart, but not on the intraday chart. And so really would want to execute whenever they're set up on the intraday chart and the daily chart together. So that's why I was getting stopped out, was because the intraday chart we're above the opening range, but on the daily chart I want to be short. And then I'm talking micro silver today. So sticking with the micros because conviction's not super strong and the risk versus reward is outsized in my opinion. So staying with micros and then just wanting to still participate, but not in a big way. So allowing myself to participate, trading the micros is a way that I can allow myself to participate without having to take a lot of risk there. And so that's when the setup, we're above, I wanted to be short, we're above the opening range. So then I get stopped out, but on the daily chart, we were still below the 50-day. So that's why I wanted to be short. So one question is, how much time do you apply to trading that's not actually placing trades in execution? Mm-hmm. And I think that's a great trade because a lot of this mindset work, just looking at the sheet, it's a lot of work. So how much, when you're managing your time, how much would you say is on actual trading and how much is on the work that goes into it?
I think it depends on experience and where you are in your trading journey. So, the more aware you are and of who you are, I don't know which comes first, the chicken or the egg here. It's your trading and you start to learn more about yourself, or you learn about yourself and then you go into trading. So they're two different sides of the spectrum, but I think for me, it's essential and always has been to review my trades. And so that takes time. That's, usually 30 to, I would say it depends on how many trades I take, but anywhere 30, 45 minutes. And then to prep for the markets, where are my levels? What do I want to trade? My plan. And then certainly a part of the review is the worksheet. And then, of course, how do you, wherever you're at in your personal journey, where are you in your self-actualization process? So, are you working on meditation? Are you, how present are you when you're actually doing what you're doing throughout the day? And that is a practice. So I don't know, some people can, it could be 2-3 hours. Some people it's 20 minutes. It just depends on where you're at.
Yeah, how long it takes for you to do the review of yourself and review of your actions is probably a more lengthy process than review of the market, the setups. Most of us are probably in front of the screen the majority of the day, so we kind of know those. It doesn't take as much prep work to see where they are, but reviewing the trades, and then it's just always crazy. You look back in time of periods of time when you were trading, and it's like, yeah, why was I trading during that time? I didn't see it at the time, but absolutely shouldn't have. I mean, and it could have been months, could have been a year, so it's always just easier in hindsight.
I mean, for me, it was last week for sure. Yeah. I should not have touched it.
Often you're reviewing that, the hindsight gets closer instead of that period of time where you wish you weren't trading.
Yeah, that's a great question. Thank you. And then I get like that when I have a colossal, what is it? A colossal winning streak. Now I have it all figured out, and risk management is for people who, that's the overconfidence. The rule of thumb for me, and since I was in my early 20s, and I think I posted it on X years ago, my trading plan, but it was always that I could never take a lost day, post a huge winning streak that was more than half of my gain. So always, if it was just something to be aware of and something to stick to, because during those winning streaks, you get overconfident, and it's just, and the good thing is the market tells you you're on a good track, that you do understand what's happening here. The better thing is to be aware of yourself, because in event that something should change, whether it's internally with the market or externally in your life, that you're able to flip that switch or ride that wave without hurting yourself.
Yeah.
Monetarily.
Yeah. And it's always hard because you want to press. If you've had a good streak, you want to keep pressing. And that transition between knowing when to press and knowing when to back off, sometimes that feedback shows up in P&L. And so if you can flip that switch faster, you just do better.
Having a parts negotiation to get the conflicting parts in alignment is a priority of mine. The parts of you in your mind, is that what you're talking about? Is it? I want to say latitude, but is it south latitude? What is that?
Yeah.
Yeah. Well, I think the key thing is I think the conflicting parts in alignment, you're already ahead of the game if you hear the negotiation. So you can actually act as the observer within your thoughts and your actions. South latitude, that's what I thought. Thank you. The more you can detach from the emotional side of things, which is tough, but it can be done. And I think within the room, in the pit room, and what I've heard in the other rooms, this is a good foundation for it to be a lot of matter of fact. And this is what the data is saying to alleviate some of that emotional attachment to trading that is there.
Mm-hmm. Yeah. Which is a great point of just, this is what the data is saying. This is the real-time feedback. And if we were looking at it, we're looking at trading as a business. if we were doing any other business, we would absolutely look at that feedback and the data. But trading, for me, and I'm sure for everyone else, just seems to be especially emotional. And so it's just always constant to try to separate that emotion from it.
I mean, I know, the thought process is that you're the CEO, you're the fund manager of your own portfolio, your personal portfolio. And so would you treat your client's portfolio, if you had clients in the hypothetical world, as you are treating your own? Likely is no.
Yeah. Yeah. Would you take 14 trades that are less than 30 seconds? Someone else was doing that. What would you tell them versus what are you telling yourself?
Right.
Yeah.
And then I'd be telling myself, shit, I have, excuse my language, I have,
I missed it. I know it's going there, and it's definitely going to that target and that price point.
Yeah. I mean, I would literally be like, okay, I have 4 rounds of C cluster trades. I need to stop. Time to stop.
Mm-hmm. Yeah.
Yeah, 100%. Not only do you need to treat yourself as a client, you need to treat yourself, I mean, and you don't need to do anything, right? Like, this is not where, an environment where we're going to say you need to do anything, but it would be kind for you to treat yourself as if you were your best friend. I suspect that all of us are of age where we are now parenting ourselves versus looking to our parents to parent us. So if you can think of you taking care of you as your inner child, and this may be going down a path that may be too deep, but it's more imperative to be kind to yourself than anything else. And yeah, of course, we all are our most critical client. This is the toughest environment and the most judgmental of ourselves. That's why we have to lean more on process than emotion. So back to the weekly recap. What was your best trade this week and why? Always celebrate wins, and not in an egoic way, but I think it's really important to wrap up and really celebrate what did you do well, so you remember what you did well and that you're capable of continuing on to do things that are in a profitable manner or following your plan, which is also profitable, even if some trades don't turn out as profit when you're following your plan. And then what is happening in my life next week, that following week, so you can prep yourself. Okay, well, had I, previous to last week, had I wrapped up that Friday before last week, I would have said, okay, I have so much going on. People are going to be in the house, listed it out. And I could really see on paper, okay, crap. If I'm going to trade, I need to diminish it, lower it down to maybe 2 sessions next week, and maybe the lighter sessions when people have gone, when they're done for the day. So that, and then one thing I'm carrying into next week would be something positive and or something that you are conscious of that didn't go so well. I would say I'd be more conscious of my C clusters and conscious of if, my schedule changes a little bit, then I need to change my trading accordingly. So remember, goals and intentions are declarations of what you believe you're capable of and more. I do like to say it's like for those people who sign up for marathons and events such as those, you didn't sign up because you didn't think you couldn't do it, right? So you're here in the trading environment. You think you can, you can, you likely have had some really great days. So that's why you're here, and remember that, so when you go to be, the hardest on yourself, remember, you've already seen how well you can do. You just have to make it a repeatable process. And that seems, it's easy to say, it's hard to do. And these worksheets are, hopefully you'll use them to help you to continue to do so.
Yeah. And a lot of times we don't want to look at the data because we don't like what it says.
Right.
So it's easier to not look at it than it is to work through that.
A few years ago, and almost him. Yep,
Yeah.
exactly.
It was tough. Yeah.
Yep, exactly. Self-coaching is tough. It is tough. But it helps, better to be aware than not aware. I think, in my opinion.
Yeah. Yeah. Extremely helpful worksheet, and helpful too to see like progression over time, giving it the time that it needs, and to see if there's any, once you're measuring the metrics, to see if there's any improvement, or if the stream of consciousness kind of changes a little bit of once you kind of start naming those trades. I took this out of boredom. I took it out of FOMO. Do we start to see some slight improvement? And do we get a trend towards maybe less boredom trades? Because now I've named that. Maybe, hopefully, potentially less C trades, because now I have a name for that and I can find that, identify it sooner.
Yeah. And sometimes it's hard to be truthful to yourself if you're just talking through the actions and seeing, just looking at it. But once you put it on paper, there's that brain to hand connection, that muscle connection, and through your eyes. And so it's a different story. And then it also, perhaps even helps you say, okay, well, this is just data.
Mm-hmm.
Okay,
yeah,
this is what
the trades. Yeah. And this is data, whether I look at it or not, the trades have already been made, good, bad, or otherwise.
Right. So how do we combat lying to ourselves? Doing the journals so that you can actually see what's going on, because only you know the truth.
How have you gone about understanding market conditions, your approach works in well versus does not? And how do you have pre-market filters that keep you out for the session? So I know in your process, it's identifying previous days opening range, previous days high and low, and then don't you wait, or there's sometimes where you don't take a trade if it doesn't hit those conditions. Talk about that for a minute.
For me?
Mm-hmm. Yeah.
Okay, so I have, it was said to me by my brother-in-law years ago that basically you have your advisors, and your advisors are your indicators. So I personally, understanding your market conditions, and actually what Lauren was talking about in Micro Silver today. So even though, I have my OR, let me go back actually, because these are my indicators.
Yeah, and maybe even explain what is the OR, or what OR you look at, because I don't know if everyone is familiar with that term, or if they have a different definition and looking at different things.
Okay, so here are key levels for me. Well, first of all, in the daily worksheet, okay, so you have your market context, the narrative. All right, so we have a bullish market, and I'll talk about in the NASDAQ, right? So the bullish narrative, obviously indices, right? And the overall bias today, well, we're somewhat in this like extended bullish range we have to be mindful of, because we're also news heavy with the war. I'm stating everything obvious. So to get the overall gist, the high level, you already plant that in your mind. So you're thinking, okay, that's in my mind, rangy, bullish, maybe it's what did we used to call it, Laura? The dreaded creeping rally.
Creeping rally.
Yeah. So those are not easy. It's not easy to trade. So then you look at, for me personally, the first key level I look at is the overnight high and low. And then I'm always looking at a 50%. And then I can jot down any additional notes. I have my bias. So you can see if the bias is straight down, if we're continued bias upside, continued bias upside, 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 upside. on all the levels. So you know, okay, I'm leaning towards the long side. It's heavily leaning towards the long side. So I'm somewhat safe to buy dips. I'm somewhat safe, and I say somewhat because not always will it work. And especially in today's climate, it just may not work. Then there's the prior day. And I do this I do the prior day with a real-time trading hour, so RTH. So, and I do it with the high and the low, the 50%, and then any other nodes. Sometimes I'll put in the all session, high and low. I'll write that down, but usually that'll incorporate here on the weekly. So you're gathering your data. Are we above the 50% here? Are we above the 50% here? Are we above the 50% here? Are these arrows all the same, going in the same way? I mean, welcome to the club. It is a spiritual journey for sure. So I don't know, like Lauren said, do you guys use the opening range? Okay. So there's the 8:30 opening range that I use. And then here at this, I put a custom 8:15. I want to see that 8:15 bar and how it measures up with the 8:30. Settlement, I always look at the close. If the market is Chicago time, I assume, yes, Central time. So if it's the settlement, I use the 3 o'clock settlement, not the 3:15 and not the 4. So if it's trading above the settlement, I'm leaning towards the long side. If it's trading below the settlement, I'm leaning towards the short side. So again, like these biases help you, because if you're up arrow, a down arrow, a neutral, and I mean, this is a mess. Why would you even want to trade something that's right, not really decided? You know the overall context, but it'll be choppy, it'll be rangy if your arrows are not even matching up. Does that everybody gather that?
Mm-hmm. Yeah. Or for me too, it's if we're in the same spot overnight as we were, if we're sideways all overnight, that's telling me the mark. If we haven't moved anything, all we've done is chop sideways. That's looking at like a short-term 10-minute chart, especially in relation to the previous day's opening range. I'm not gonna even take a trade.
Right. Like if we're overnight, you're up 25, up 25%, down 25%, and sweeping around close settlement, then again, same lure. I mean, I'm like, this is mush. If I wanted to make 200, I can make 200, but I mean, what's the point?
Yeah, why? Especially in this environment right now, it's like if it's chopping and sideways, the risk versus reward just isn't there. Right. I think identifying that, and then like the way I act on that is that I don't even really log in until I'm not going to be right there at 8:30, right at the bat, trying to even look at it. I don't let myself look at it until 9:30, and if we're still in the same spot, I'm not going to look at it again.
Yeah, I mean, and I feel the same way. I've learned over time, that 8:30 opening range is better for me to understand it, know it, feel it, rather than actually engage in it.
Trade on it.
Yeah, it's way too much energy that's indecisive, and mind you, I like to trade news events and I like to trade flipping markets, but that 8:30 open is just not a healthy space for me. I don't know. I don't have that tool to front run tweets.
You could have the headlines and still be wrong,
Totally.
Yeah.
I mean, I think they just said there was a live spot that came out this afternoon or before the call this morning, and it was something about Iranian saying that Trump, there's nothing settled, and maybe it was an Israeli reporter or something like that, and I'm like, why is this not tanking? Why are we up this high? It's insane. So you guys, if you need me to take the levels, if you guys use other things, I certainly can make these grayed out and you can customize them, use them as placeholders. So let me know, because I can make that change.
Okay, do we want to switch over and talk about ags now? Do we have
Sure.
any more questions for Dani?
Well, should we talk about movement and then go to ags?
Yeah, we can.
You want to do that?
Yeah. I
That's
don't know
funny.
if you even want to marry into the Trump family, but you just need to know the insider trait. You need to be in the club. Haven't figured out how to do that yet.
Yeah, I think he's trying to bring America in, right? Yeah,
To
I
the
don't
club?
know. Yeah, into the pub. I mean, you know, the young investment accounts for
On
the
the
young.
insider trading club.
Shoot. And anyway, okay, so for actual tools outside of the worksheets, both the daily and the weekly, we also wanted to talk about mindset tools. And the first one we want to talk about is movement. How would you say you guys are on movement? Are you still choosing high intensity workouts while you're trading? Not during, obviously while you're trading, but you know, or are you choosing more lower down regulating the nervous system movement tools? So like going for walks, yoga, maybe some Tai Chi, Qigong, those kind of activities.
I'm mostly going for walks or just getting up, stepping outside, going for a walk, and then realizing, you know, sometimes that anxiety is still there and you're like checking your phone. Try not to. Try to truly step away. And then it's nice to like, oh yeah, the sun's still shining, the grass is still green. There's still a world out here that's not just the screen, and things are okay.
Yeah.
And then you come back, ideally, sometimes you come back, you're still wadded up in anxiety, but a lot of times you come back and you're like, there's no reason to trade this. Like, why would I want to click the mouse?
Yeah, especially for those of you who are, you know, trading is your source of income, your only source of income. And I think I heard David say in the room the other day, he, you know, I think this is going to be a long walk day during lunch, you know. Yeah, that's cool. Yeah, I think it's super important.
Yeah. Why did I think that was a good idea? And then reviewing your fills and you're like, why did I ever think that was a good idea?
Right.
Yeah. Okay. Yeah. I'll switch over to, if you want to stop sharing your screen, I will start. Yep. Switch over to ags.
You're welcome. You're welcome.
Okay, so when we talk about ags, let's start on corn. So the best resource is going to be the CME website. And just to reiterate, this is just for educational purposes only, and any trades recommended are just hypothetical. But if you go to corn, start there for today. Great overview, but you go into specs, you can see, and you know, if these contracts are new for you, you want to spend some time making sure you know what size contract it is, what the ticks are. You know, so 5,000 bushels. So 1 cent is going to be $50 per penny, and then it trades in 2 bits, 4 bits, 6 bits, $1 is kind of how we've always been taught. So 4 ticks per dollar. Margins. Now the margin is going to change as the price of the underlying commodity changes. And so that's going to be, you know, it's not always the same. And then as the volatility changes, the price changes, and if it becomes more volatile, it's obviously got more inherent risk. So that margin requirement is going to change. Then I always look at spreads too. So spreads are in the ags are really prominently traded. And a lot of times we'll trade the spreads like, so this would be May to July. or like July to Dece, 375. So just something to be aware of. We'll get into that here in a little bit. And then the calendar of, when do these expire, and first notice day. So you also want to look at, and know which ag contract is going to be deliverable versus cash settle. And then first notice day is whenever it starts that delivery period. So you want to get out of that front month contract, and you want to roll that prior to first notice day, because once you're in first notice day, market is in delivery and you could be at risk of delivering that contract. So you want to avoid that unless you're a true hedger and set up for delivery, which some people do, but 99% of the volume is not trading with the intent of delivering. So like May corn, first notice day is going to be the 30th of April. So we're coming up on that in next Thursday. So you're going to see that volume and the spreads change as people are rolling out of the May going into the July, approaching that first notice day. And then volume and open interest. I guess that was a holiday. I don't know why that must have been Easter. What is average volume day? What's a high volume day? What's the trend of open interest doing? So right now we've seen open interest moving, more open interest in July. And you can see that transition where open interest is coming out of May going into July. And then we also have large open interest in December. So let's go to look at the corn chart. So 2 crop years in one, or you're looking at your crop years. So May corn is going to be old crop, and which that's corn from, harvest is in the fall, depending on what area you live in the United States, going to be like August, September, October, November. Just generally say September, October is harvest. And so once it's harvested, that crop is done. It's in the bins. And if I need to buy corn today, if I'm an end user and I'm consuming corn, I'm going to be buying old crop, because new crop is what we're growing this year. So weather headlines are going to affect new crop because old crop's already in the bin. Demand is going to affect old crop because that's if I have to buy it today or tomorrow or next week or next month, or on China or exports, et cetera, all of that is on your old crop contract. So let's say we've got this spread between old crop. The market's job is to price in risk. So if we get a big headline with China, we get a trade deal done with China, and they're going to buy a bajillion bushels of whatever tomorrow, that's going to spike old crop. And we also get the same headline that weather is super favorable and there's no risk and perfect growing season. We're going to see that huge spike in old crop. That's why people will trade these spreads. Huge spike in old crop, new crop goes down, or assuming we're talking about Chinese demand plus weather. So Chinese demand keeps the market bid, but old crop's going to go up more than new crop because we have a whole new potentially record crop coming on the new crop contract. Or if we have lackluster export sales, whole picture of demand is going to affect both. Demand strong, keeps a general bid. Demand's weak, keeps general pressure on the market. But we'll be looking at those spreads of one going up more than the other, both going up, but one going up more than the other, or both going down, one going down more than the other. If we start to because we're just now in planting season, May. For us around here, we plant in May. Some places in the country are getting started planting. It's a little early, but it's just going to depend on different conditions, different states, growing season, things like that. So we're starting to get into planting. Now, if we start to get the weather headlines of potential drought or floods or whatever it may be, too wet to get in the field, too wet to plant, things like that, that's going to affect your new crop contract, because we still have plenty of, we know what the supply is for old crop now. It's in the bins. We can measure it. Hypothetically, there's a lot of debate about the accuracy of the USDA on their balance sheet. But anyway, it's a government report, so you can debate it all you want to. But what's unknown is the new crop, because we don't have it in the ground yet. Are we going to have a record crop? You assume that we have a decent crop. How decent is decent? Is it enough? So those are all the things that the market doesn't know and prices in risk for. So also important to know that.
Lord, there's some questions about fertilizer.
So seasonal pattern. This is December corn. So this is always going to be your new crop contract, your harvest contract. And the seasonal pattern is that we kind of start to build. The market's job is to price in risk. So we start to price in risk until we've gotten the crop in the ground. And then the market's going to take out that risk once we know, planting is going good. Summertime weather is good, timely rains. Once all of that is more known to the market, it's going to take that risk out. And you're going to see that reflected in price. So that's kind of the seasonal pattern. And if you're looking to hedge something, you're going to want to capture, if you're a farmer looking to hedge your production, you want to capture that seasonal time frame for a lot of things. So that's red is 5, green is 10, and 15-year time frame. But we can go back and look historically. 2025, we never had a summer rally. We put our high in February. I don't think it ever happened before. 2024, same thing. Small weather, small rally, sold off. Never really gave you that seasonal bump. 2023, headlines about, I don't remember, but most likely weather, huge spike, and added risk premium took it all back. 2022, markets chopping around, keeping the risk premium bid. And that was, I think, during the Ukraine war also. So pricing in risk, taking that risk out. So seasonal pattern is one thing, but the actual pattern are two different things. It's always interesting to look at.
Laura,
COVID,
can you hear me?
2020, obviously did the opposite. 2019 followed that seasonal pattern. This is December corn, 2019, didn't price in much risk, not a lot of pricing opportunities. And then weather must have turned, and we rallied almost $1, and then we sold back off. So as you're trading that contract, it's important to know what's the typical seasonal pattern. And a lot of that, the market already knows that and it's pricing that in, but then you're going to get fluctuations as the market changes. So let's look at
Laura.
July. It's kind of the main old crop contract. So the seasonal pattern is a lot more mixed. I just clicked on, but you're going to see, this is kind of cool, is stacked. So this is the past 20 years of that pattern stacked on top of each other. Right now, fairly large cluster of that seasonal pattern of the July contract is flat. So, you want to know what contract am I trading? What's the contract specs? What's the typical seasonal pattern? What are the spreads saying? And we'll look at the seasonal pattern of that spread also. So like July to December. Seasonally, you see into expiration, July gain on December. You can see it rally. So I would say the black line is the current spread. So it's been fairly sideways to lower, hasn't followed that typical seasonal pattern. So we need to know, are we in a seasonal year? Or are we in an atypical year? Kind of all. So do we have any questions here before I get too far into the weeds?
Can you now hear me? She can't hear me. You guys can hear me, but Lauren can't.
This over here. Okay, so supply. Can y'all hear me okay? Okay, you can hear me both. Okay, I can hear you now, Dani.
You can?
Yeah. So
Okay,
I guess
great.
I have to just click on your name, click it and unclick it, and then it starts working.
Okay, if you go back, so Reverie had a question. He said, he or she, how are you handling the fertilizer supply disruption risks these days? If you go all the way up to 1146.
Yeah, so that's a question I don't have the answer to, because working on some more research of what's the global picture look like. But for us, personally, we have already locked in our fertilizer needs. So, price is one equation. So we've already contracted that before, right whenever the war started, which was good. And then the next question beyond price, when you get into the cash markets, is just, can I buy it at any price? First question is, what price can I buy it at? Second question is, at any price, can I buy it? Physically, can I buy it? Right now, it seems to be okay. So I don't know how to answer that. All I know is from our perspective, we're covered. But as we go on, as we use up available supplies, does that change coming into the fall or into next year is probably a bigger question. And yeah, we're all good. And also not necessarily just for the US, but farmers in other countries. Right now, South America, they're on harvest. They have opposite season. So while we're in planting, they're in harvest. So they're wrapping up harvest. So it's probably a bigger question for them as they start looking into planting for next year. And then I know Australian wheat, we're having some talks about availability, rice availability. So it's a question that I can't answer because it goes on, when do you actually need the physical needs? What's the physical in the pipeline versus disruption of exports? Is that, we've got some in the pipeline now. Does that disrupt us for going forward? And then what countries are at the biggest risk and what planting seasons are at the biggest risk for that disruption? So complex topic that I don't know the answer to. Just for us, we're okay.
Yeah. And then you see Magister's question at 1149 beyond that.
So I always wondered, how many grain, cattle, hog futures contracts would you need to trade per day to have the equivalent of a farm and ranch? So that's going to be, let me get my calculator out, but that's also multifaceted because let's just say around here, we have irrigated farm ground. So just a baseline yield is going to be around 200 to 220 bushels per acre. Depends on your irrigation, your water supply, things like that. So, if you're doing, say, 125 acres times 200 bushels, that's going to be 25,000 bushels of corn. That'd be 5,000 or 5 contracts. So we have farmers anywhere from, 500 irrigated acres to 10,000 irrigated acres. Anywhere in between. And then you're going to also have your crop rotation. So we may farm, that farmer that has 10,000 acres, they may not all be, you're going to have a rotation. So you may have some in wheat, some in corn. We don't grow a lot of beans in our area, but in the Midwest, there's more of a rotation. So that's kind of a loaded question, but you could have 1 million bushels would be on a large farm. So that would be 1 million bushels divided by 5,000 contract would be 200 contracts. So you're going to hedge that. There's multiple ways to manage that risk. You could hedge it yourself. Some people do. You can forward contract it with the grain elevator or your end user. And so that would be a cash contract, forward cash contract. You have to make sure you can deliver that. So you're not going to if you're going to grow 1 million bushels, you're not going to forward contract 1 million bushels until you know that I'm above my baseline. You're far enough into harvest that you're above your baseline or whatever it may be. So you're going to be conservative on the forward contract, which is where having a hedge account, being able to hedge that yourself comes in. Also, I was talking earlier, you may get into a situation, and we've had these situations where you have 50,000 bushels, but you get hit by a drought, so your production goes down to 25,000 bushels, but I've already forward contracted 50,000 because the market was telling me to do that because of the seasonal time frame, the war risks, the et cetera, et cetera. So, all those things go into these decisions for hedging. And so you may have to come in and buy calls, maybe by the board to offset that, because you're going to have to buy out of that cash contract. So you could do it with calls, you could do it with futures. So I think you'll find like the more questions we ask, the more it comes down to it depends, and it's just a multifaceted equation to be solved. Like cattle or hog futures. So let's go to cattle, live cattle. And so live cattle are going to be 40,000 pounds. And we are selling them right now. The market, since corn prices have been low for the past 2 years, your cost of gain is cheaper. And cattle prices are high. And so the market is telling you the value of gain means put more weight on those cattle than normal, because for each pound of gain you put on, the market is rewarding you for that. So typically we would harvest those animals at 1,200 to 1,300 pounds. Now we're seeing 1,400, 1,500, maybe higher. So one contract of live cattle is 40,000 pounds. And if we're in goal is say 1,400, that would be 28 and a half animals per contract. So we have, there was just as a rule of thumb, you're going to say could be depending on each individual's target end weight. Live cattle contract could be 25 head to 30 head. And the large feed yards around here could be 50,000 head at any given time or more. So, 10,000 to 50,000. I mean, we kill, these are rough numbers because it changes, fluctuates, but, each week we're processing 400 to 600,000 head of cattle per week. And so just the scale of the industry, probably any industry, but it's just incredible to wrap your head around. One contract's going to be 28 head, and we're killing 400 to 600,000 head per week. So could be, a lot, pretty sizable. What other questions? We have just a few more minutes before we wrap it up, but you have any other questions? And then also kind of drop in the chat of what you want to hear about next week. So something too, which is interesting. So let's say you're a 1,000,000 bushel farmer, and let's just say you're going to have it 100% hedged in theory. Now that's 200 contracts. So your margin requirement, let's go to the December contract, is $600. So that's $120,000 margin requirement for that hedge, just initial margin. But let's go to cattle. Cattle are more volatile lately. Grains have started to see more volatility as the war has started and crude has moved, but cattle have had a big market run. And so let's just say you have 1,000 head of cattle on feed, and one contract is 30 head. That's 33 contracts, and margins 3,300 per contract. That's 110,000. We're talking these large feed yards could have 10 times that. So that's $1 million, or we could have even 50,000. You're talking $6 million just for initial margin, just to hedge one feed yard. 100% of that. Then it comes down to, are we going to be 100% hedged? How are we going to do that? Are we going to do that with futures? Are we going to do it with options? All those kind of decisions, but huge cash flow concerns to manage, just the capital intensive nature of the industry. Yeah, you could have paper. So a lot of people will theoretically, on cattle, do the crush, where you're essentially feeding cattle on paper, where you're selling fats, buying feeders, buying corn, and everyone kind of does it on a slightly different ratio, but that's the equivalent of locking in those margins on paper rather than through the cash side.
That's crazy.
But a market's only going to give you positive margins. The ability to do that, it's all going to be arbitrage also. So there's going to be few and far between times when you can really lock in a really nice basis, or else, a nice crush on paper, or the market's going to just take that away. And that's where owning the physical comes into, the profit potentials are going to be different and higher on owning the physical, because you have to take that physical risk rather than just offsetting it on paper. But being able to do it and recognize it and execute on it when the opportunity is there on paper is a great tool. Okay, I'm going to pause. If I can figure out how to do that.
Hopefully you won't freeze. I didn't freeze. Did you freeze?
And
You didn't
then
freeze. Awesome. Thanks, Laura. Oh. She'll be back. All right, is there anything that we're not touching upon? First of all, she didn't give me the silent treatment. She couldn't hear me. That's number one. So she wasn't being mean. Is there anything that you have on top of mind that you want us to address next session? Going once, going twice. You're out. Okay. All right. It's up to us. So we will see you here next week, same time, same channel. I'll make some changes to the worksheet that I already feel that I want to make, and we'll keep going. Action items. At least fill out the worksheet one time. For sure, do the weekly wrap up, because I want to know how you guys felt doing it. I want to know if there's tweaks to be made, but most importantly, I want to hear how you guys felt going through the motions of it. So please make sure you do that. Laura, anything? I can't hear you.